Welcome to the Commonwealth Home Ownership Podcast, the real estate investing podcast for Canadians. Whether you're a seasoned investor or just getting started, you've come to the right place. If you're looking for a way to take control of your life through real estate investing, stay tuned and be sure to join us at cwho.ca, your hub for all things real estate investing in Canada.
Hey everyone, welcome to another episode of the Commonwealth Home Ownership Real Estate Podcast. This is Phil Wong. With me as always is Brad Price. And our guest today is Valden Palm, who is a veteran real estate investor, investing for a number of years, tons of experience. And he will be here talking about RRSP mortgages today. So hello, Valden. Hi there, gents, and all you folks out there. So Valden, before we start, can you tell us a little bit about yourself? In terms of your, your experience, what you've done in the past, where you're. Okay. Sure. I'll try and give you as quick a tour into my world as I can. I started out in architecture, quite honestly, so it wasn't that big a leap to get into our real estate investing. And my real estate investing career started in Vancouver, when this little fledgling company called Rain was getting started, and I joined up with those fellows and with that organization, which is a great organization, and I was with them for 23 years. I learned how to invest in real estate, how to do a lot of different creative things, how to put joint venture partners together, how to analyze properties, how to property manage, and just ran the gambit of things. So it was a lot of fun to do that, I amassed a good portfolio of properties, and that have obviously come and gone throughout the years: houses, condos, apartments, townhouses, single family houses with suites, that sort of thing. I've done some renos too, like my architectural background made it real easy for me to do, and my real estate training made it very easy to understand the process and to be able to get a sense of what should be renovated, what's the right things to renovate, what are you going to get your return out of, and what are you just what is your things that you spend too much money on that you'll never get your return back. So it gave me an opportunity to have a good solid background in houses. So that's how I got started. Okay. And I hear a nickname for you that's thrown around a little bit, Mr. RRSP. That's right. There's a couple of them, Mr. RRSP. Mr. Homebuyer was another one. And they ran tandem with each other. Mr. RRSP, maybe I should tell you, your listeners, how I got into RRSP investing. Yeah, that'd be great. We were doing there was a presentation on different ways of financing, and I can't remember which presentation it was at. Somebody mentioned something about, you can use secondary vendor take back VTB financing, or you can even use RRSPs to help finance property with, and yada yada yada. They went on, and at the end of the meeting, I'm looking around and I said, did everybody else miss that? RRSPs? Like, that's got to be a huge minefield of wealth that you can tap into. And everybody had missed it. And so I remember talking to Don Campbell about it, and he said, well, why don't you become an expert at it? Why don't you learn all the ins and outs and write a course on it? Which is what I did back in 2003. And I came up with 10, 12 different ways to use RRSP mortgages to help you buy and fund and sell your real estate. And it was a great product. And put it down for a while. I sold it for $19.95 for it was a hardcover package with CDs and training materials and all that sort of thing, which I am, by the way, in the middle of retooling to meet our more social network, internet savvy kind of world to bring it back to the table again. Obviously, it won't be at that higher price, but I have some other things that have to offer to it as well. To jazz it up a little bit, make it more exciting. I know it's a hot topic right now, and there's a lot of reasons why it's a hot topic. Having to do with the economy the way it is, and trying to find new ways to buy and sell properties, and of course, people with RRSPs are also looking for more solid investments to put their RRSP in. And real estate has always been a solid, tangible asset that is good to put your RRSP money onto. And so that's sort of where I'm leading to with that program, to teach people how to use other people's RRSP money, how to look for it, how to find it, how to structure deals. And then on the other side of the coin, if you have RRSPs or have RRSP contribution room, or you want to move your RRSPs into a vehicle that's able to invest in mortgages, I'm going to show you how to invest safely, what you should be looking for as an RRSP lender investor. So there's a duality to it. There's the RRSP borrower and the RRSP lender, and there's a little bit for both.
Okay, that sounds great, actually.
Is that going to be in person, Valden?
Well, that's the wrinkle too, is that there is a component in it whereby I will personally walk you through with your prospects, and I'll do a presentation for you. I'll do it a number of times, and I think what I'm working on is as part of the guarantee of the program is that I guarantee that we will get secured for you from your RRSP prospects X number of dollars. I haven't decided the number yet, or you can get your money back. So I will walk you through the process. I will coach you through by watching me be there and doing the presentation for you for 2 or 3 or 4, whatever it takes of your prospects, until you do it yourself, until you feel comfortable using your words instead of, and you can use mine too, but it's all about a personal relationship situation. And so I'm going to teach you how to do that and how to be more personable with your prospects. And it's very much on both sides. It's a relationship sort of enterprise. Mm-hmm. And so I show you how to strengthen that, how to present it, and all within the bounds of what's allowable, and not breaking any rules with the securities commissions and things like that, and CRA. So there are some nuances to it. There are some rules, but there's a lot of skating rink to play in, if you will.
Mm-hmm. Well, we'll keep our ears to the ground on the release date on that one. One question that comes to mind is, you talk about how prominent the discussion is around RRSP investing currently. I mean, how just with the length of time you've been playing the real estate game, how have things changed from when you started to now, and why is there such a drive towards investing RRSPs into real estate as second mortgages?
Well, I believe that and this is just my belief. I have no crystal ball, but fellows like Carrie Dent, they're all speaking of potential falls in the stock market area and that sort of thing. They're not that happy with the volatility of what's happening there, and we've experienced it ourselves here in Alberta with the drop in fluctuation in oil prices so dramatically and radically and almost seemingly for no reason. And it's just like a piece of paper is worth this one day and then it's worth that the other day, and yeah, there's an ebb and flow to real estate too, but at the end of the day, it's a tangible, solid asset. And it's not, people can't pick it up and run away like they can with a stock certificate. That stock certificate is a piece of paper that's worth this one day and worth this the next day. So people are looking for some stability, and if you set it up correctly from the lender side, and you're careful as to how you place your RSP, following certain criteria, so that you don't put your money at risk, too much risk. Nothing's risk-free, of course. Then you'll do very well with it. And I'll always be a real estate advocate, with the ebb and flow. Over time, real estate will always go up.
Mm-hmm.
So these tactics, these RSP strategies, does it only apply to RSPs, or does it apply to any registered account?
Well, RRSPs, TSFAs, LIRAs all have the ability to invest in mortgages. The wrinkle to this is that the RSP, or the accounts, need to be ran through one of the trustee vehicles. So it's a trustee, not necessarily a bank. And I'll talk about that in a second, because that's an interesting story. But they're the ones who look after or hold your RSP on your behalf, and they administer the funds within the guidelines that CRA has, and so there's a setup vehicle that happens with that.
Yeah, so that for listeners is what you would typically call a self-directed account that's typically held by a
Very
trust
good, yes.
company, and they would act on your behalf, but still within a set of guidelines.
Mm-hmm.
Very good, and so that leads me into the bank. When you if you have let's say you have an RRSP in a I'm not going to pick on any of the lenders, but pick one of the top 5 or 6 big lenders. They will not usually have a fund that invests in RRSP mortgages, that invests in mortgages. So when you are trying to administer or trying to control or guide or direct your RRSP money investments, you have to go to a trustee institution that allows your RRSP to invest in to invest in mortgages. The banks will tell you, if you ask them, they're good to tell you that, oh yes, we do have self-directed plans, but they're not really self-directed plans. I call them multiple choice plans. They're self-directed in that you get to decide which of my 9 funds that you can place your money in. So that's really a true self-directed plan.
So
if you tell them that you're going to
predetermined,
if you tell them, some of them will even say, if you tell them that you're going to move it into the trustee account, and they'll ask you why, and you'll tell them what you're going to do, and some of them will even say that's illegal, which is a lie. They'll say you can't do that, it's not allowed, and the reasoning behind it is that they're going to lose the account, aren't they? They're going to lose the ability to use your money. Well, it's your money, so you should be the one that gets to direct where it goes to.
And
so
it's like too much risk, right? Too risky of an investment. Ours is nice and safe.
Oh yeah, like they say, oh, our real estate's too risky, and I'm going, oh really? Well, how did the oil stocks do last year? And another little interesting thing that people talk about when we talk about RSPs, or when you're talking about RSPs with people, they sometimes will say, oh yes, my RSPs are doing really well. They're giving me 16% or 18% or whatever. And interestingly enough, when they actually look at their statements and they see all the fees that are deducted, and then they do the calculation, the return on face value might be 16 or 18%, but in actuality, it's like 2% or 3% because of all the fees. People, when they find that out, they really get upset. They get upset. But in setting up an RSP, all the fees are on top of the return that you're getting, and typically the RSP lender does not pay those. The RSP borrower does, and that's how it gets set up. And on the borrower side, you just build it into your deal. That's the cost of doing business, and it's one of the expenses of your deal. So if your deal, the numbers work and you deal that way, then then away you go. But that's a very important selling feature for RSP lenders, is that they're getting a true return of 8%, 10%, whatever it happens to be, depending on the deal they get.
Mm-hmm. So Valden, you mentioned about, some of the banks just arbitrarily telling you without fact that it may be illegal to do what it is that you want to do with your own RSPs. Like at the end of the day, it's your money, and really you can really do whatever you want with it.
Well,
to the
I
most
think
part,
I mean I don't want to be too slanderous to the banks,
Yeah.
but when you consider the fact that come RSP time, which I'm sure some have experienced already, is you're getting RSP advice from a teller who was given a 9-hour crash course in how to direct somebody's RRSP, do a calculation and see how much money they can direct into an RRSP account that they would hold, that would allow the bank to direct to one of their funds. So obviously they've got a stake in you keeping your money in the bank. So they're going to try and do whatever they can to dissuade you from making the move of your RSP into a trustee account, and them losing control of the ability to borrow your money from you.
Yeah, so obviously it's not illegal to do RSP lending. We know that.
It's not illegal, but one of the things that you have to be careful about is in transferring it into the trustee self-directed account, there is a process that you set of forms that you need to fill out. It's like a cash transfer in kind into an self-directed RSP account with the trustee, and you have to be careful how those forms are filled out, because you don't want to trigger a tax event inadvertently by, in actuality, taking the money out and then putting it back in again. You want an actual transfer to happen, not a taking out and putting back in again.
I think
So
the key word there, Valden, I think you mentioned that the key word there is in kind, correct?
Yes, correct. Yeah, so it's a transfer in kind. So
yeah, the terminology is really important in that case. So if you don't fully understand the forms that you're filling out, definitely ask some questions, because it's very important that you do.
And there's only a few trustees that do this right now. There's a few in Ontario. Names escape me because obviously I don't work there right now myself personally. Olympia Trust is the one that handles them a lot, 90 to 95% here in Alberta. But I'm actually working with one of the other trustees right now to see about bringing them into the fold as well. So I have a meeting with them tomorrow. That should be interesting to see how that goes. It'll be nice to have a couple of choices.
We'll have to do a follow-up.
Olympia Trust is very good.
What's that? We'll have to do a follow-up episode to see how that goes.
Yes, well, by the time this airs, I might have some good news there. So
excellent.
Fantastic. Yeah. So one thing, Valden, I want to go back a little bit here. So just when you're talking about the rules and regulations around RSP investing. So obviously the trust company is managing your funds on your behalf. Do they still have to follow OSFI rules? So typical mortgage rules, like what applies in this scenario?
To a degree, they will follow those rules. There is a requirement usually for an actual appraisal on a piece of property when you're putting a mortgage on it. But for the most part, they're leaving it up to the RRSP holder to make the decision as to whether or not they're going to put that mortgage on this or on that. So at the end of the day, the maneuver is run just like a regular mortgage. It has to be run through a lawyer's office, one that specifically is familiar with RRSPs, RRSP mortgages and self-directed accounts. Otherwise, it's like slugging through a vat of peanut butter trying to get things going. So there's there's issues of timing and making sure that the timing that happens right, and the money has to be in the account already, and you don't want to try and finesse your deal so that you're waiting for the RSP money for the deal to close or anything like that. I usually suggest that it happen in a two-step format, and I would get into that more if we would have more time. But obviously, with my stuff, with my program, I will get into that. But yeah, there's a number of different ways that when I first started, creative ways were available to us, and through some abuses, unfortunately, those have been closed down. So, but there's still some really funky strategies that I don't know of anybody else who's mentioned them, of some of the RSP world out there that's been doing them recently or in the past 10 years even. So yeah, I'm excited to reveal those again, and that'll be fun. That'll be fun. The other thing to remember about RSPs when you're lending is that typically they're third party. They're third party lending, and they should not be related to you by blood or marriage, or you have any corporate interest in any part of the deal. And so I'm focusing mostly on what we call a traditional arm's length mortgage. There are self-directed mortgages that are available that aren't non-arm's length, but in so doing, now you're triggering CMHC fees and all of that kind of insurance that's required to make that happen. And there's a whole other set of rules that need to be addressed, because you are able to do that at non-arm's length, but you obviously have to pay back your RRSP.
I guess just to back up a little bit more,
Yeah, sure.
for our listeners who
I tend to go on a tangent. Just
no, it's all good. It's great. But for just some of our listeners who aren't familiar with what an RSP even is, because I feel like there's a misconception that some people think the RSP is in and of itself an investment, but it's not, right? It's just a vehicle.
Okay, well, what an RSP is, it stands for our Registered Retirement Savings Plan. And basically what it is a percentage of your income the government will allow you to put in a plan called an RRSP, and it allows you to defer your taxes. So it's not that you'll never pay taxes on that, it's that you're allowed to defer the tax and let that investment grow through some vehicle. And there's an allowance for you to deduct from your annual personal income so that you pay less tax in that fiscal year. So it is a vehicle for tax planning. It's a vehicle for your future. The TFSA program is a little different in that you can still do the same kind of investments, but the investments grow in your TFSA. There's no tax due on it, where it grows just as if you don't have to pay the same tax. Of those of you who are familiar with the TFSA program, you can contribute into it and pull out without a tax consequence.
Because the TFSA you contribute with after-tax money versus RRSPs where you contribute with pre-tax money, right?
Good.
Yeah. I believe this year the TFSA is up to $75,000, if I'm not mistaken.
I think so. Yeah. I think they've gotten it up to that, so that's exciting.
So now
you can actually do something with that.
Yes, exactly.
But it was like, yeah, it really. For the first little while, it didn't excite me too much, because like $5,000, $6,000, man, it's not even worth it. Because I mean, there are fees and such that are involved with setting up mortgages and all of that. And like, if you're going to do a mortgage for like $10,000, it's just not economically makes any sense. So, you should be working in the $20,000-$25,000 range for a mortgage as a minimum, and beyond. But the other proviso for RSPs mortgages is that it has to be on a piece of real property. It has to be on a piece of real property in Canada, and it can't be like a chattel mortgage, like on a mobile home or a leasehold property or anything like that.
Or an IOU.
Or an IOU.
So let's jump into an example here. So I feel, you know, sometimes we start chatting and like we all kind of, you know, we understand the terminology and we understand the situation whereby people can second mortgage or loan their RSPs as a second or third mortgage in some cases. Can you maybe just give us a simple example of how one would go about doing a second mortgage, maybe from the borrowing perspective?
From the borrowing perspective, okay. Well, what you would do is, let's just use $100,000 property. I know the numbers are going to be, you know, real, but I mean, let's just use it as an example because the math's easy.
Sure.
Okay. So, so let's just say we're buying $100,000 piece of real estate, and there's a $75,000 first mortgage on it, and basically we would have $25,000 a down payment to make. Okay. Now, in older days, you used to be able to use part of a second mortgage as part of the $25,000 that you put up. Banks are getting a little queasier about that, so I typically do it as a second step process. So basically, you would take, let's just say, a $10,000 as a second mortgage, which would bring the total loan to value to 85%. Now, what a loan to value is how much loan you have against the value of the property. So 75 and 10 is 85% of loan money to the value, which is 100,000. So that's they typically call the LTV, or loan to value calculation. So you would find someone with an RRSP for $10,000. Again, like I said before, don't go that low right now, but this is for the sake of understanding the ratio examples. And you would convince this person, or would ask them to consider putting an RSP second mortgage on your piece of real estate. You would show them all the numbers, what your intention with the property is, and what interest rates you're willing to pay. Show them how they're going to get paid back, when they're going to get paid back, what the term is, what the payment arrangement is, which you can play with a little bit. That's another conversation, of course. And said RRSP holder, if they don't already have an RRSP trust account set up, will go in and make that happen in the trustees office. Now, you can probably, and I haven't done in the past, you can assist them in that process of setting up a trustee interview, getting their account put into place, and then once their money is there, either if cash or if it's being transferred in kind, which can take anywhere from 3 weeks to 10 weeks, depending on how diligent the bank is with losing their RSP holder. Anyway, that's why I say that don't count on that money being there until it's there. It's not there until it's there. Don't let that be the ruler of the closing date of your deal. It's just a secondary aspect to your deal, and you will manage that process almost behind the scenes.
Yeah, because if your money's diversified across multiple stocks and funds, I mean, the bank's got to go and provide instruction to sell and liquefy those investments to actually turn them into cash, to move them across to your self-directed account. And like you say, it could be simple in the fact that you're maybe into a couple of stocks and it's easy to kind of liquidate those and move the money, or you may be quite diversified and it's a little bit slower. And let's face it, the banks are not going to want to sell your stocks quick, because then the moment that they're liquefied, there's no more money to be made on them. So
well, it also negatively affects their book, right?
Yeah,
Good.
absolutely, from a capital position for sure.
Yeah.
So what, I mean, there's so much, I mean, that's a good example. And I think one thing that we hear a lot about is RRSP swapping. There's this notion of swapping RSPs and RSP triangles and all of this kind of discussions. I mean, what
that
is
scares the
that?
crap out of me.
Yeah, I can tell, but you almost fell off your chair there. I mean, I'm not sure how much whiskey you've got in that drink, but
Not enough. Not enough.
yeah.
Okay.
So I mean, what does it mean? What does that mean, first of all, and then why is it a notion rather than anything
Okay.
else?
All right. So I'll just start with the basics of what that is.
Sure.
Let's just say that you and Phil each have $25,000 in RRSPs, and you decide, well, you know, if you lend me your 25,000, I'll lend you mine on a deal, right? And then it's a swap. It's a swap, and perhaps you'll work to give yourselves a more favorable interest rate than what basically would be in the streets. Well, it's going to fail in a couple of different manners. First of all, it's a collusion. It's like contrived. Each mortgage, each investment that you make and that Phil makes has to be able to sit on its own merits. It can't have an underlying a reason for me making this loan that you're going to give me money, right? So as an RSP lender, it's your responsibility to make sure that what you're lending on is a true and righteous deal and it makes financial sense. If you've got some other motivation outside that the reason that I'm going to do this loan is because I'm going to get some money back from somebody else, or there are going to be three of us that do the same wheel thing. And so it's going to be hard for somebody to track because one does it to three does it to one, two does it to three, kind of a thing. It's a contrived, what's the word I'm looking for? A contrived and planned
intention
maneuver. It's the intention. Yeah. The intention is not pure. It's not a pure mortgage investment. And there have been cases, there's case law where CRA has taken this to task. And what you risk in doing that is the collapse of your RRSP. And not only the collapse of your RRSP, but they could deem the collapse years behind of where it is today. And now you have all those penalties to pay for all those past years, and plus tax becomes due and penalties with that, and it's just not worth the risk, man. Just go, as I think it was Ron LeGrand used to say, just go milk another cow, man. You know.
Well, I mean, there's
so
plenty of other deals out there.
I very much caution people that want to get into that, and I really flinch for them. I think some people just think that it's a great idea, and it's a great idea until you get caught with it, and until the trustee's not going to say anything really because they don't know. But if it comes down to an audit or whatever, and particularly if you've given each other favorable terms and rates and things like that smack of outside the norm. I think in the CRA case, they'd each given each other like a 2% interest rate or something like that, which is totally ridiculous because in the streets at the time, the rate for a mortgage would have been like 12% based on what was happening at the time. So, bing, red flag goes up. Do more digging, and then the problem. So just stay within the confines of the playing field. Okay, there's creative, and then there's I don't want to use the word fraudulent, but I mean, and then there's just not proper. Let's just put it that way.
I guess along those lines too, the lender of the RSPs also, depending on what the borrower does with that money, the lender cannot have a part in whatever the borrower does, correct? So for example, the borrower decides to use that money to, say, purchase an investment, the lender cannot have equity interest in that said investment. Is that right?
I think I understand your question. I think what you're saying to me is if I'm trying to sell you a property
Mm-hmm.
and you want to buy my place, I can't have an interest in my place. Is that what you're saying?
No, I'm saying like, for example,
Sorry.
like I'll say I need funds for a down payment on a property.
Okay.
Right. And
Let's just say I'm the guy.
okay, yeah,
I have
Hmm.
$100,000.
yeah.
RSP.
Okay, so Valden, like I need $100,000 of RSPs or money to purchase an investment property. So I'll go to you and I'll borrow from you. If you put a second mortgage on one of my properties, and then I will take that money. I'll buy this investment property at whatever terms you dictate. But then say that you, because you put out the money, you also want a piece of that property. Would that be legal?
I would say no,
Okay.
because it's not part of the mortgage.
You couldn't loan your RSPs to somebody, they go and invest in a property, and then you joint venture with that person on that property.
Mm-hmm.
That's right, based on the fact that you've actually loaned them from your RSP.
Mm-hmm.
Mm-hmm.
Yeah, no, that in itself doesn't cover the arm's length requirement.
Yep. So Valden, you mentioned the funds being registered against a property, and you used the example that you walked through about buying that property, that person utilizing a $25,000 down payment, and then putting that $10,000 in second position, basically. So,
yes,
I made a note here, but can RSPs be used for a new purchase, or can they be used against an existing property that somebody owns as long as there's equity there? Is it open to interpretation?
Both. Those are both clean. Those are both clean. Now, you can even use it as an entire first mortgage. Like, it doesn't have to be sit in second or third position, right? But again, like I say, when it comes to lending, one of the things an RSP lender, there has to be a relationship there. It can't, for example, and this is one of the pitfalls or the difficulties you're going to have as an RSP borrower, is you can't just put an ad in a paper. It says, "Hey, I'm looking for RSP money," because then it becomes a public security that you've crossed the wall or crossed the bridge into a security, and now there's a whole bunch of other rules and regulations that you need to follow, filings, etc., memorandums, etc., like that. When this is why you have to foster relationships with friends, with family, with friends of friends, and I believe the rule of thumb is there has to be at least a 3 or 4 separate period of interaction with somebody outside of the deal. And so it's like you can't advertise for somebody cold, or otherwise it becomes a security.
Yeah,
Excuse me. That's why you can't go on the internet and go, "Hi, I'm looking for RSP money." Right? There has to be a personal relationship. And as a lender, as an RSP lender, I'm sure there's a lot of RSP lenders out there that will agree with me, is that they don't just lend to anybody, and this is one of the things that I talk about in my training here as well, is what those things are that you should be looking for. The loan to value ratios. What are the numbers? Who is the person you're lending to? What kind of track record have they got? I mean, it's not to say that you can't do something with somebody who's new, but if they do a presentation that says, "Here's what all the numbers are, here's what my intention is, here's what my payments will be," and there has been some foundational relationship set up there, then it could very well, be a win for you, right? But as a lender, I am going to know who my borrower is. My relationship with my borrower is going to be more personal than if I was the bank. If I was the bank, as long as you meet the, the thin, tight box of criteria, check all the boxes, and like, you're in, buddy. And if you don't, if you don't fart baby powder, you're out. Sorry, that was a shot.
Again, if you're a lender and you're an accredited investor, would that allow you to bypass some of those rules?
What's accredited investor mean?
I believe in Canada, it has, if you're a single individual, you have an income of at least $250,000. If you're a couple, you have an income of $300,000 or more, or you have a net asset of, I believe, $5 million or more.
And so the question again is?
If you're an accredited investor, so if you have those, if you fit that criteria of, of having those assets, having that income, can you bypass not having a personal relationship with the borrower?
I don't think so. I'm not sure about that, but
Okay.
I don't think so, because anyway, why would you want to? Like, why would you want to do that? You're giving it to somebody who's, that you don't know, and presumably you got your $5 million by not making those kind of risky decisions.
Mm-hmm.
And I mean, even if you could, I don't think that I would do it myself, personally.
So Valden, I want to maybe just go back to a point you mentioned about the advertising perspective here. So, I mean, it's so common to see on social media, posts every single day about, hey, I'm looking for RSP money, or vice versa, however the post reads. I mean, are you meant to have a license to do that?
Okay, well, I do know that mortgage brokers do have a wider latitude of being able to get in the middle, and but they'll probably charge a fee, like a brokerage fee. And don't you dare, if you're not a mortgage broker or have a license, try and take a fee for assisting somebody in putting one of these together. Oh my God, are you going to get into trouble? Right? It's like practicing without a license.
I feel like there's a story behind that.
Yeah, I don't want to go there right now. It's not something I did, but anyway, I've always told people, I said, don't do it. Don't do it. It's not worth it. Not worth the money, or it's not worth having that bit of money for whatever the deal is to get into such hot water. So anyway, let's divert. Where did I leave this out? How do we get here again?
The advertising, and is there a license requirement?
Right. So I think that you have to tread on very careful grounds when you're on social media and you're going, I'm looking for an RSP mortgage for this particular property or this particular deal. My approach would be, hi, I'm an RSP, or excuse me, I'm a real estate investor. I invest in real estate with other folks, using joint venture money and RRSP money. I'd be willing to talk to somebody about how all that stuff works. Maybe work so we could do some investing together. And then I would start to form the relationship that way, as opposed to being deal specific, in which case it's a subtle difference. But I try to stay away from the quicksand and red flag areas that are already taped off on the golf course.
Oh, goodness. I wish I could hit the ball that straight, Valden. So, I mean, how does, like we say, there's so much stuff going on and social media, and people putting posts up, and if you're someone with RSPs and you're thinking, hey, I could invest here and I could invest there, and there's so many opportunities, like how do you protect your investment? And I know you kind of touched on a little bit when you said go through all the things you need to look at, like loan to value, make sure that if something was to happen, foreclosure, and your money's protected. Like, yep. How do you, besides the relationship component, like that's really, I guess, number one is make sure you have a relationship with the people that you're looking to work with.
Well, that's why it's important to do that, right? Because then you minimize the chances of, if things go in a ditch, your RSP might have to foreclose and own this piece of real estate, which is an interesting side story, which I'll get into in a minute. But if you have to foreclose, you have to foreclose, and you have to set it up front so that there's room for you to foreclose. Too many times in the past, this is way in the past, people have leveraged their RSP to 105% loan to value ratio, and things go in the ditch, and then their RSP loses money, right? And then there's a big loss. Now, do RSPs lose money sometimes? Do they lose them right now? Do any of you know of anyone with an RSP that's negative of what it was last year? Anyone?
It's pretty quiet.
I'll wait. I'll wait. But I mean, I'm not going to say that it doesn't happen, because it does happen. But the idea is to minimize your risk, because you're in control of your RSP investment. And when you choose this route, the buck stops with you, man. You're the captain of the ship, and the thing of it is with the relationship is to be, is to be amicable and try and solve the problem. But at the end of the day, both sides, and I tell RSP borrowers too, if you fall in the ditch, you're gonna lose it. You're gonna lose your property, and it's no different than a regular house mortgage. If you don't make your payments, they're gonna take your property from you. So make sure in your presentations you're not over leveraging to 105% and trying to feed on somebody who's less knowledgeable than you, which has also had court case taken where one investor is seen as more senior than a junior investor, and taking advantage and being predatorial and against the other side. You don't want to get into that kind of a fight, or into that kind of a situation where you're seen as a senior predatorial investor taking advantage of some poor lonely RSP investor.
Yeah, I think that'd be a bad place to be. What do you recommend for loan to value? Like, what's your thoughts on what would
in this marketplace? I don't think I would go higher than 85% loan to value. In the past, I have gone as high as 90-ish, but we're definitely not in that kind of a marketplace right now. And the reason, and they're like in a fast-moving, rising marketplace. And the reason is you need room. You need room as an RSP lender if things go sideways, that you have enough money to pay for the foreclosure. Because it's going to be like $5,000, let's just say.
Yeah, and I think it's important to distinguish, maybe if I can quickly, just the reason that you need to have some room, like you say, Valden, is because, if you're lending your RSPs and they're secured against a property, and for whatever reason things go down the toilet, if the bank is in first position with a mortgage, they're going to get their money first. Now, if the property is worth $400,000 and the mortgage is $360,000 and your $40,000 RSP is there, and it's $400,000 total mortgage against that property, like you say, first of all, you've got $5,000 to cover the foreclosure. Then you might have to pay realtors to deal with some stuff. Then who knows whatever else. So all of a sudden, the bank gets their money first, and you would likely be in a position where you get what's left, which could be the dog's breakfast. So I think just for
very true. So
people listening, it's really important to understand that's why there needs to be some room there.
Mm-hmm.
Absolutely. And actually, another good point I sort of mentioned that there were some that over financed with an RSP. That's one of the reasons why things got tightened up in criteria. There was a time where we didn't need appraisals. You know, it was the RSP lender's responsibility to determine if the property, what the property value was, and the trustee would basically presuppose that they had done that due diligence. And what they were finding is that too many of them did not. So then they made it a requirement to have appraisals done with the mortgage placements. So just so the, you know, there is no possible way for one to be over predatorial to the other. At least there's that guideline in place. That's safety nets.
So what was the story, Valden, that you wanted to go into? About,
which story was that? I'm trying to remember where
we were talking about foreclosing on a property because of your RRSPs, because of over leveraging. Yeah. Okay.
So in your RSP, you're not allowed to actually own real estate in your self-directed plan or otherwise. The only there is one situation at which you can own real estate in your RSP, and that's if you acquire it through a foreclosure. Your RSP then becomes the owner. That is to say, you know, there are obviously there'll be things that happen with the first mortgage holder, but if you're the one successfully your RSP, which is seen as a separate entity now, okay, so it's a separate person, separate entity outside of the lender, outside of the borrower. That's the only manner in which you would be able to acquire real estate in your RSP. I think it's wrong. I think we should be able to hold property in your RSP just like they can in the United States IRA accounts.
Oh,
but I don't know if that's in the cards. Anyway, but the proviso to that is if you acquire the real estate through a foreclosure and it's the RSP is the title holder, there is a requirement for you to dispose of the asset in a reasonable period of time.
Oh, so it's not even something you can hold on to long term. You can't. They force you to get rid of it
in a reasonable period of time.
So if that property,
whatever that means,
if that property's condition dramatically improved in that reasonable amount of time, and then the RSP, being its own entity, sold said property, the difference between what it purchased it for and what it sold it for,
ding 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 ding
would
ding
be
ding ding,
tax
will be
exempt.
will be realized within the RSP.
Yeah, so to be sheltered under that umbrella until such time.
Correct. It would be no different than my 10% or 15% interest. It would be a windfall to the RSP.
To be clear, though, this is only in the event that you were, say, a second mortgage holder with your RSP and you foreclose on that property, correct?
Or first.
A second or first, but you have to be like, you can't just this not you're purchasing a foreclosure.
No, you can't do that. No.
Yeah,
it has to have been, the RSP has to have suffered a default that you as the director of the RSP directs the entity of the RSP to foreclose and to take over the property.
Okay.
I think sometimes I have that automatic assumption that a property that goes through foreclosure needs to be renovated, because typically, I think I've just looked at so many bad properties that have gone through that situation that you get used to them being, obviously they're not paying the mortgage and they're also not cleaning up after themselves, so
yeah, they're definitely not getting a new kitchen and they can't pay for the mortgage.
Exactly. It seems to go hand in hand. So I think that's a good good distinction.
There's a whole lot of nuances that happen with those kinds of things, and I do talk about those as well. And there's lots to talk about. We could be here for 9 hours talking about RSP mortgages, which is tons of fun. And you just have to be careful. It's like taking the ship out to sea. You got to stay away from the sandbars at the too close to the coastline, and know where the deep waters are to safely get out of the harbor.
Hey, Valden, are there different rules? Sorry, Phil, I just beat you to the punch there. Are there different rules, Valden, in different provinces with RSP mortgages?
RSPs are a federal. RSP mortgages are a federal enterprise. Like you can have your RSPs. You have RSPs if you're in BC. You have RSPs when you're in Manitoba, in Quebec. Well, Quebec. Anyway, that's a joke. Ontario. Different provinces. It's RSPs are a CRA or a CRA vehicle. So it's the same across the board, as far as I understand.
Okay. And in terms of the rules that have that you've seen, like the rule changes that you've seen to RSPs and how they apply to mortgages, since you've started, what has dramatically changed since you discovered this whole RSP mortgage thing?
Well, I would say the role of the trustee has changed a little bit, and I think it's more widely known. What the basic criteria should be for a lender. Excuse me, and it was an area that, I mean, it's been around for a long time. Before it got more widely used residentially, it was used a lot more commercially. I don't know if people don't know that, but you think about all the trust accounts that are out there, and like the pension funds and all that stuff are very similarly run in how they fund commercial properties, right? They become the lender and they fund the commercial property project, and they get their returns and so on, so on, and so on. That's why some of them had got into trouble a little while back when some of the projects didn't pan out very well. So, but when they're funded by pensions, that's part of the roll of the dice. It's no different than anything else. You have pension fund managers that decide where they're going to place their pension money to get a bigger yield for their client, which is in a lot of cases, their union memberships or whatever. So I don't know if I quite answered where you were going.
I guess the question is, okay, so I'll rephrase the question a little bit. Has the utilization of RSP, self-directed RSPs, changed over the years in terms of what you can do with it outside of registered securities and with banks, like in terms of I guess exempt market securities like real estate?
I think it's become more prominent, more widely used, more scrutinized than it has been in the past. I think that's probably the biggest thing is been more scrutinized, and I think that is because there have been too many more reported cases of abuses and of, again, as I'd said before, proprietary sort of relationships where one is taking advantage of another and not basically told the whole story, and then the person usually that has the money is taking a risk that they really didn't understand about. So again, there's another component in dealing with RSP holders is that they have their own independent legal advice with I mean, that's prudent with even in any joint venture partnership, that each party gets their own independent advice so that you know what you're doing, and one can't cry foul against the other, and so it's the same thing. So I think the biggest thing is that it's under a more of a watchful eye.
Okay.
The vehicle's still the same. There's a few tighter rules as far as being able to watch what's going on. And I think some of the trustees, like we used to have a number of other, like BTB Trust used to manage as well, Maple Trust and those kind of trust companies. Some of them got out of it. And again, that's why I'm trying to get other institutions back on board with it, so there's more selection. There are more opportunity to use more than just one trustee. But Olympia has been very, very strong, and they've been very good in they know exactly what's to do. It's like a fine oiled machine once you get things working fine with them. But remember, I mean, you know, usually the RSP the RSP borrower, who is putting everything together, putting the deals together, is in a lot of ways is the quarterback of the deal. So you want to make sure that whoever you're talking to understands, you know, you're bringing all this together and we're all making it happen. And yeah.
So Valden, if you're lending funds and, you know, like you said, the guy or the woman putting the deal together is the quarterback, and I mean, as the lender, are you looking at what they're going to be doing with those funds? I mean, are you analyzing where they're going to put them in a sense as well?
Absolutely, you are. Absolutely, you are. As I say, you and this is why it has to it's a relationship based sort of transaction. Is that you have to trust that what they're presenting you is the real McCoy, it's a real deal, and you have to do your own due diligence as well. I mean, this is you're getting into it's like you're getting into a business, so you have to have at least a basic sense and understanding of the workings of that business and what it means. And that's one of the roles that I'm taking on with in my course, is that I'm going to make sure that you as an RSP lender know some of the basic things that you need to know, or at least know where you need to go to understand more about the process, because it is a process, and there's nothing more beautiful than an RSP borrower and a lender being on the same page with things and having an excellent transaction from beginning to end, where the borrower's happy, the lender's happy, and they say, let's do it again. That's where you want to be.
Yeah, and I think there's a misconception that, you know, the funds are, yes, they're being secured against a real estate asset. However, that's the security to back the funds. The actual borrower could turn up the next day in a brand new Mercedes, and you might be thinking, well, what? Hang on a second. You're talking about this deal or that deal. I mean, the actual use of the money is really up to the borrower once the funds are in the account. Is that correct?
Well, presumably when you're asking me to borrow you my RSP, or a portion of it, secured on a piece of real estate, and you show me the numbers on that piece of real estate as to how it's like anything else, any bank. How am I going to get paid back?
Mm-hmm.
Show me that you can pay me back my money. Show me what the plan is and what you're going to do to execute it. Whether it's an equity takeout and you're doing whatever, I could give a flying fig to it, to be honest. What I want to know is, how secure is my RSP investment?
Yeah.
How are you going to pay me back? What's the plan? What's the plan here? And if it's like, well, you know, I know things are going to change in 10 years, and that's not giving me the warm fuzzy feeling about this plan. You know, it has to be something realistic. And it could be just a simple matter of, this property cash flows right now $500 a month. I don't want the cash flow. I need some of the money to go buy another asset or to do something else. I've been sitting on it for a long time. I want to do an equity takeout. So my equity takeout is an RSP mortgage. And really, what do I care if there's enough coverage there, and the person, I have a relationship that I trust that person in what they're doing and their track record. Obviously, if they've had this property for 10 years already, or 5 years even, you know.
Yeah, I think it's good to distinguish that, like you say, it's really about,
it's the property.
Yeah,
it's about the property. It's about the numbers. It's about the plan, and you have to feel, as a lender, you have to feel comfortable with your security, with your loan to value ratio, and the fact that you're going to get paid. And how are you going to get paid? Right?
Yeah.
Now there are certain other programs where other strategies, or whatever we'll call it, where the payment structure is a little different, is a little more different up front. You can work with balloon payments and certain things like that. But again, to do that as a lender, you have to have a solid and strong understanding and a strong relationship with the person you're borrowing to.
Mm-hmm.
So Valden, we discussed a little bit back just to we
Yeah,
talked
like I said, I get on a tangent.
No, it's all good. No, I just wanted to cover like different aspects too, just because we talked about if you were a borrower, initiate a conversation with potential people who have RSPs. A lot of people have RRSPs that may not be getting great returns, so you can always initiate a conversation and say like, hey, look, I'm trying to do a deal. Let's have a conversation. Maybe we can work together with your RSPs and get you better returns, and I can do this deal. However, if you're an RSP lender, if you have RSPs, what would be the best way to approach, or what would be the best way to find borrowers to lend to?
Well, I think it's there's enough investor clubs around per month, per province. Go to some of the meetings and go to some of the membership and say, and find out who's the shakers and find out who's doing things. And I wouldn't have any problem saying, I want to start a relationship with somebody, no different than being a joint venture partner. Is I want to meet people who are investing in properties. I don't want to do it myself. I just want my money to work for me. And I want to have a relationship with a partner who knows how to do that and who knows how to do it safely for me and for us. And we're both going to be happy at the end of the day, at the end of the deal, so we can say, wow, let's do it again. So as an RSP holder, if I'm looking to lend it in mortgages, part of my due diligence in understanding the process is to know which cornfields to go find corn in. And like I say, and especially nowadays in our electronic social media world, there's no excuse not to be able to find a group or 10 or 12 or 20 in your area to be able to find people. And again, it's a word of mouth thing also, right?
Mm-hmm.
It's a word of mouth is another strong, a vehicle for finding investors, just like joint ventures. It's the same methodology. It's just a different golf club, if you will.
That's good advice. Thank you, Valden.
I take it from the golf analogies that you'll be looking forward to. You're looking forward to summer coming up here, Valden.
Oh yes, yeah, you are. You bet that for sure.
Right.
My golf clubs aren't quite talking to me yet, but they were whispering a few weeks back, and we got hit with big snow here. But anyway,
well, I mean, it looks to be getting a little bit better over the next couple of weeks. So hopefully you get an early summer.
I hope so.
We discussed some of the pitfalls of RRSPs, in terms of not finding the right lender, right borrower, over lending on the LTVs. What other pitfalls would you say that we might have to look out for if we were dealing with RSP mortgages?
Man, I think we've basically, in a roundabout fashion, have covered a lot of them.
Mm-hmm.
Again, I say it's about training yourself as a lender. I mean, this is your job. This is your job you're now at the helm of your retirement account. To this point, you've been paying some advisor to do this work, and he's been paid handsomely. Now it's your turn to take your hand at the wheel. And so it's your responsibility to learn how this works and to learn how it works and to learn how it doesn't work. And to protect your other entity, which is your RSP nest egg, right? You're prepared, your nurturing that nest egg to have more nest egg golden eggs in the nest, and so that you have a nice retirement at when you're ready to retire. And it's treat it like a business, because it is. It's like a secondary business for you, and you're the CEO of your RRSP, and therefore the buck stops with you, as I said before.
So, education is fundamental, really. And so that leads me into, do you have a date yet for your course, Valden?
I'm looking to put it out there within the next 45 days, or 60 to 90 days rather. I'm just going to give you a summary that you can give to your people as to, the kinds of things that I'm offering to go through. But a lot of it's a hand-holding experience thing. You guys, your ownership will get a special pricing as the thing goes out first time here. But we're going to revisit I'm going to reading off my notes here, just to revisit the program. As a borrower or lender, learn about the trustees, how to analyze the numbers, what all the costs are, know what those are, the difference between what you can do with RSPs and TFSAs and LIRAs, some of the creative strategies that I use and that I have created myself, understanding what RRSP syndications are, those kinds of things, why the pros and cons. I personally don't like them myself, but that's because I'm a control freak. I like to be able to sell liquidate my RSPs as much as I can, or as quickly as I can. RSPs, mortgages in themselves aren't as liquid as just doing a buy sell order. But if you think it takes a long time to get out of an RSP mortgage, try getting out of an RSP syndication. Anyways, like I say, I have a program where I'm going to show you and do the presentation for you and your RSP candidates, and just walk you through the process so that you can do it on your own. But I'll do it the first time and help the first few times and help you, and there'll be a number that, that I will work to ensuring that you're able to get at least this amount of money in RSP money pledged, and it's going to be easier than you think it is, to work with your real estate. I guess it's a hand-holding process. And what does this say here? Oh yeah. So anyway, we'll teach you about how to set up the networks and how to be a little more able to walk the introduction in public, and walk and realizing that it's not deal specific. And so what you're looking for is to start the conversation and to start relationships before you start pitching on RSPs to somebody. You teach people, ask questions. It's about asking questions. Are you happy with your RSP returns? Is it really a true RSP return, or is it just, have you not taken into account the fees? Check your statements. Like all these kinds of little subtle things. It's about other relationship building blocks, and it's about engendering trust with the people that entrust their RSP money to you with, because they worked hard for it, and it behooves you to be responsible and to be careful with it, because it's not yours.
Mm-hmm. So if for our viewers and our listeners, if they're interested in the course, what's the best way that they can get in touch with you?
Okay, well, I'm going to put all that together in the summary that I'm going to give you, including how to get a hold of me, and awesome. How to get engaged with it all. So look for that. I'm hoping to have it out by the time this airs for you guys to give as supplements, and we'll go from there.
Perfect. And that'll be all included in the show notes, and for anyone.
Yeah. Okay, whatever you call it, I guess.
We'll include the info. How's that?
Awesome. Like I said, I could talk about this for days. Like, I love RRSPs. I love real estate. I love, the power of real estate, what it can do for you, what it can do for your partners, what it can do for your RRSP people in helping them secure and to save their RRSP nest eggs, as I call it, saving RRSP nest eggs one egg at a time. There's lots of opportunity out there for both sides, and I'm just not that keen on, or never have been that keen on, rolling the dice with a piece of paper called a stock that's worth this one day and then only worth that another. Say, real estate goes up and down, but at least you have a solid, tangible asset that will rebound.
Well, Valden, I feel like we're only just scratching the surface here, and really there's just so many details that we're just never going to have the time to go through. But thank you so much for taking the time to share your thoughts with us and your experiences, and we really appreciate it.
Oh, thank you for having me. And like I say, I hope I've given a bit of a landscape painting of what RSP investing is. Some details maybe were not as detailed as I'd like to get into, but for time's sake, you can't get into everything. But I think it gives people a taste of what it is, and more to come, one way or another.
So for those of you who want to know more, just keep an eye out for Valden's course.
Awesome. Thanks, guys.
Excellent. Have a good night, Valden. Thank you.
And you.
I think the part when you refer to it as a business, I think that can sometimes be a little bit of a differentiator for people that get into it thinking it's going to be soybean lattes and roses. And
yeah, well, I mean, if that's what you want, and if that's all you can stomach, then you're better off just to let a bank manager decide what stocks he's going to put it in.
Yeah.
And you're rolling the dice. Either way, you're going to roll the dice.
Mm-hmm.
Mm-hmm.
It's just who's running the show here, you or some other guy. And by the way, when it's some other guy, he gets paid whether you win or whether you lose.
Hey everyone, thanks for listening. Just a couple items before we head off. We wanted to let everyone know that we're starting our monthly live events again. It's a great place to connect with other real estate investors and to learn from our various guest speakers. They will be hosted on the last Tuesday of every month, and to sign up or find out more, please visit the events page at cwho.ca. I'll see you guys next time.
Thank you for listening to the Commonwealth Home Ownership Podcast. Be sure to check out all of our past episodes and our ever-growing library of content at cwho.ca. Until next time, remember to get out there, take action, and create a life of wealth by design.